Anybody can register. Church, school, NGO, even your coconut seller. You go let us sort them out.
Everyone can register was the first to register. Now it's fast and easy.
No matter your business or organization, register with ORC today.
This is Deloitte Ghana. By building on Deloitte's core purpose of making an impact that matters. We are a leader in professional services in Ghana. Across many Ghanaian professional services firms, our identity can be traced as far back as 1947. For the first time, here is our story. Meet some of the people who started it all. In 1939, James Donald Barnes, a Scottish chartered accountant, arrived in Goku as an internal auditor of a United African Company. This was an era where there were very few qualified accountants in the country, with most of the pioneering accountants in West Africa being foreigners. Our story in Ghana began on 1st January 1947. J.D. Barnes opened his office under the name J.D. Barnes & Co. Chartered Barnes & Co. Then later Deloitte & Co. And in 1972 Deloitte Haskins and Sales. In 1978, J.D. Barnes, as a true innovator and a contributor to society, spearheaded the formation of the Ghana Institute of Taxation as a professional body to train tax professionals in the country. In 1979, the office relocated from the 3rd floor of Cocoa House to Ibis Court, 4th Liberation Road, Accra, Ghana. This will go on to become our office location for more than 40 years. After more than 30 years of service and dedication to the Ghanaian firm in 1980, J.D. Barnes was succeeded by Joseph Kobina Forson after his retirement from professional work. J.K. Forson, the first Ghanaian managing partner, led the Institute of Chartered Accountants Ghana as president from 1982 to 1984. In 1991, Cecilia Nyan was appointed as a partner and became the first female partner in the Big Four accounting firms in Ghana. She later became the president of the Institute of Chartered Accountants Ghana from 2008 to 2010. Deloitte Ghana has contributed to 3 presidents of the ICAG since their inception. Later that year, under the leadership of J.K. Forson, Deloitte Haskins and Sales merged with Tete, Usher and Partners, who were representatives of Touche Ross International, to form Deloitte and Touche Ghana. In 1992, Dr. Pakwasi Inde, a partner of Touche Ross Milwaukee office, USA, relocated to Ghana to help establish Deloitte and Touche West Africa Consulting Division. He later became a renowned politician in Ghana. In 2002, after
Recording in progress.
Good morning, everyone. Hello, everyone. Good morning and welcome to today's webinar. Thank you so much for joining this webinar, which promises to be an insightful one. My name is Presla Chibipreko, and I am a senior consultant with the Tax and Regulatory Unit here at Deloitte. As we may all know, the Office of the Registrar of Companies is the regulator mandated to register and regulate all business entity registrations in Ghana, as well as ensuring effective corporate governance and compliance. This webinar seeks to talk about ensuring compliance with the Companies Act and also a brief discussion of issues encountered by companies. Before we start, let's kindly take note of a few housekeeping rules. We would like to mention that this webinar is being recorded and will be posted on our YouTube page. When the room is full or an attendee goes off and is unable to join, you can join our YouTube page as this webinar is streaming live. Currently, all participants have been muted. During the Q&A session, you can raise your hands and you'll be unmuted to speak. You can as well drop all your comments and questions in the Q&A chat box on your screen. Also, a QR code will be displayed to take your feedback getting to the end of the webinar. Without further ado, let's invite Mr. Daniel Owusu, who is our country managing partner, to give us the welcome address. Thank you.
Okay. Thank you very much, and good morning, everyone who has joined us. It is my pleasure to welcome you to this online webinar this morning, which is focusing on ensuring compliance with the Companies Act and the insight from the Registrar of Companies. Indeed, Deloitte, we are excited to have you here today for what promises to be an insightful session. I believe we have on this webinar business leaders, compliance officers, and governance experts looking to navigate the regulatory landscape and maintaining compliance with regulatory standards in Ghana. As a country, we have seen various initiatives that have been initiated to enhance compliance and business development in Ghana. Key among these is the development of the new Companies Act 2019 Act 992. The Companies Act seeks to enhance the corporate regulatory environment by streamlining registration processes, improving corporate governance, and embracing digitization in an ever-changing landscape that requires both agility and bold steps to attract and retain investment, which is key for our country's development. Our objective this morning together is to deepen the discourse on regulatory obligations and compliance with the Office of the Registrar of Companies, focusing on the Companies Act and its implications for businesses today and for the future. Particularly, we aim to bring the Office of the Registrar of Companies closer to you, our clients, and the businesses, and to share best practices on legal entity management practices to mitigate regulatory non-compliance risk and to enhance value for your businesses and for your organization. It is my firm belief that the discussions will generate valuable insight for all stakeholders and shape policy direction in the corporate and regulatory landscape in Ghana. I encourage you all to stay actively engaged and ask your questions when you have the opportunity to do so, as we strive to make an impact that matters. I therefore have the singular honor to introduce the Registrar of Companies, Mrs. Mami Sama Pefra, who will be our keynote speaker for this webinar. Madam, thank you for honoring our invitation and thank you for coming. And we look forward to having you speak and also giving your insights. As you know, Mrs. Pepra is a seasoned legal and corporate governance professional with extensive expertise in corporate law, regulatory compliance, and strategic leadership. Her professional career includes pivotal roles in both the private and public sector, as we can see. Ladies and gentlemen, thank you once again for joining this webinar, and I look forward to this engaging webinar, and I'll come back at the closing stage to make some closing remarks. Thank you, and let me hand back over to you as we continue with the program. Thank you. Okay, so I see that Mami has joined. So Mami, welcome to the webinar, and it's nice to see you here. So let me at this point hand over to you. I see the number keep going up, and hopefully we have an enjoyable session this morning. So welcome.
Thank you very much. Good morning, everyone. It is a real pleasure to join you today. Let me begin by expressing my sincere appreciation to Deloitte Ghana for organizing this collaborative webinar and for its continued commitment to strengthening corporate governance and accountability in our business environment. In a rapidly evolving business landscape shaped by technological advances, increase in stakeholder expectations, and dynamic regulatory frameworks, compliance has never been more important. It is more than a legal obligation. Compliance is a cornerstone of sustainable growth. When the Office of the Registrar of Companies was established under the Companies Act 2019, Act 992, it marked a turning point in Ghana's approach to business regulations. It separated business registration and company regulations from the Registrar General's Department, creating a modern and autonomous institution focused on company administration. Our role at the ORC goes far beyond issuing certificates. We are enablers of a business environment where good governance thrives and companies operate transparently. We aim to support businesses of all sizes to understand and meet their obligations in a straightforward, accessible way. To this end, we have embraced a more dynamic approach in recent years by streamlining filing procedures and engaging directly with the business community through educational campaigns and stakeholder forums. The coming into force of the Companies Regulations 2023, LI 2473, has further clarified compliance expectations under the Act. Key areas include timely filing of annual returns and financial statements, disclosure of beneficial ownership information, and maintenance of proper company registers and records. These provisions are not meant to create hurdles. Rather, they are designed to make business more transparent and credible, qualities that attract investment and drive long-term success. We understand that compliance can feel daunting, especially for smaller businesses, but it is not about bureaucracy. It is about building a business that can grow and endure. Compliance assures your partners, customers, and regulators that your business operates with integrity. It is the foundation of trust. Compliance is not the sole responsibility of the regulator like the ORC. It is a shared responsibility across businesses, regulatory bodies, and other public entities. The ORC is committed to work with you, not just to enforce, but to educate, guide, and support. Our ongoing initiatives, which includes capacity building workshops and webinars such as this, public education campaigns to demystify compliance obligations, enhance digital filing system to make compliance faster and easier, simplify processes for company dissolution, liquidation, and restructuring, and also strategic collaboration with institutions such as the Ghana Revenue Authority for streamlined business exits. In particular, the areas of insolvency and liquidation and companies strike-off have gained attention nationwide. We recognize that businesses go through life cycle, growth, maturity, and sometimes closure. The ORC is ensuring that such transitions are handled transparently, responsibly, and in alignment with tax and legal obligations. At the ORC, we aim to foster not just a compliance requirement, but a culture of compliance, where good record keeping, ethical management, and timely reporting become second nature to businesses. This culture must be cultivated through open dialogue, practical support, and partnerships, such as the one we are enjoying today with Deloitte Ghana. We see Deloitte and similar professional institutions not just as observers, but as strategic partners in promoting best practice, sharing knowledge, and encouraging responsible corporate behavior. Finally, I wish to emphasize that the journey to compliance may sometimes seem complex, but it is undoubtedly a journey worth taking. Compliance is not a destination. It is a continuous process that unlocks trust, sustainability, and growth. Let us use today's session to listen, learn, ask questions, and share experiences. Every insight shared contributes to a stronger, more transparent corporate Ghana. Together, let us build a future where compliance is not only valued but embraced. One that ensures our businesses, indeed our economy, is positioned for a long-term prosperity. Thank you, and have a fruitful discussion.
Madam Registrar, thank you very much for your address. Indeed, compliance is a journey worth taking, and it's a pleasure for us to have you this morning give the keynote address. Ladies and gentlemen, at this point, we would be going straight into three discussions, having had the foundation well set up for us by the registrar, Madam Mame Sama Pepra. My name is Wisdom. Wisdom. I know I'm a partner with the tax and regulatory business here in Deloitte, and I will be facilitating the first session where we look at the role of having a strong legal compliance structure within your organization. I will do that and then have Madam Sandra Kwaku, Director from the Office of the Registrar of Companies, Director of Compliance from the Office of the Registrar of Companies, also speak on compliance. Then we will have Mr. Eric Yeboah, Deputy Head Insolvency and Liquidation Directorate of the ORC, also give us a presentation on what we should look out for when it comes to conversations around insolvency. So we have a packed morning, and it's also going to be an engaging morning where we give you the chance to share your thoughts, ask questions. Whilst the presentation is going on, please feel free to use the Q&A button to ask your questions. We will have solid 40 minutes to also interact with you. So please stick and stay with us as we go through the three presentations this morning. So I just want to piggyback on where Madam Registrar left us. Compliance is not something that happens in vacuum, and in particular, legal compliance is not something that will happen in vacuum. So there are legislative backing to what happens in Ghana, and for a company, an entity in Ghana, what is the key legal framework that you have to look at when dealing with legal compliance within your organization. From a legislative point of view, the core is the Companies Act, 2019 Act 992, and this is the bedrock of legal compliance or corporate legal compliance within your organization. There are other legislative pieces that come together to support that. And I also want to draw attention to the fact that Section 4 of the Companies Act makes it clear that the Companies Act provides for the general requirements, but would not take away requirements provided by law regulating specialized industries such as banking and insurance. So while the Companies Act is all-encompassing, it is important to understand that it only forms the base upon which other specialized industries would have their regulatory regime, where if you're a company, for instance, you're a bank or you're an insurance company, then you should ensure that you are complying with the Companies Act, but also with specific legislation for your industry. So that's very important for you to be aware of. And then, of course, there are regulations that come together to support the Companies Act, the LI 2473 that was passed in 2023, provides for even more specific requirements that as a company you would need to abide by. Let's just get a perspective on, we are talking about legal compliance, but how does that fit into corporate governance, which is the bigger brother, if you like. So corporate governance can be thought of as the system of rules, practices, and processes by which a company is directed and controlled. And that has been bundled in a number of ways, but it's very key to maintaining a sustainable business that abide by rules, abide by practices that are acceptable, and then processes that direct the path of a company. We've been in this country and we've seen in cases where there have been lapses in corporate governance, where companies have just gone off their high standing because they've had lapses in corporate governance, or where companies have simply fallen into significant risks because their corporate governance structures were not in place. So corporate governance is at the core when it comes to sustainable business practices. But linked to legal compliance is a key pillar within the corporate governance framework, because it is that pillar that ensures that the practices, the rules you put in place, and the processes comply with applicable law. We are in an environment that is championed by law. The rule of law is supreme. And as a company and a corporate citizen within the space, it's important that you are playing according to the rules. But if you do not have a structure that ensures that you play according to the rules, then you would be falling into legal risks, financial penalties, reputational damage, and operational inefficiencies. And that is exactly what legal compliance seeks to do, to safeguard an organization from legal risks. If you do not follow specific requirements of, for instance, the Companies Act, you can go into a transaction but not have the legal backing to go into that transaction. You can fall into financial penalties. The Companies Act, Act 992, is replete with financial penalties that could be imposed on the director or directors of the company, could be imposed on the company itself if certain requirements are not satisfied. And those penalties mean that you are taken away from the bottom line of shareholders. So financial penalties a very critical area that legal compliance safeguards a company from. Then we have the key matter of reputational damage. You'd from time to time see the registrar publish in the dailies that companies that have not complied with their annual return filing and other filings with their office would be struck off a company. You can imagine you have a running business, but the name of that business is struck off the register of companies in the country, and that would be a huge reputational damage to the company. So having processes within that ensure that you have legal compliance would be key to safeguarding against reputational damage. And beyond that, you would see that where you are only catching up as a business, you would typically have operational inefficiencies where you need to file a return by a particular date, but you are only filing that 2-3 years after. You are probably paying more for late filing, and you do not have your information in place to file the appropriate return. So these are important safeguards that legal compliance structure in an organization would provide. And let me give you how legal compliance fits into this whole conversation around corporate governance strategy, etc. So on this screen, you will see that a company will typically have a strategy, vision, mission, where it wants to get to. That will be broken down into objectives. You would have your competitive positioning, etc. You are looking at your key metrics, etc. And this is what would usually be the tip of the iceberg, where you can see a lot of board focus on what is the strategy, how are we getting to that strategy, etc. But how you operationalize these strategic actions would always come with risks. So you would need to have risk management framework, and that speaks into the governance you have. You will see here and a strategy, we have the tone from the top, and that tone will be important input into the risk management environment that you have. That would go into your monitoring and reporting, whilst also monitoring what is happening in the legal space. We've just talked about the Companies Act, and in the next few slides, I will touch on some of the key the key introductions from the Companies Act, and we will see that there are some that we are not paying enough attention to. You should have a system that scans the environment to identify proposed legislative introductions into the space. What would those additions to the legislation or changes mean to your business, and how would you position yourself to comply with those requirements? So the proposals will come, they will go into the policy documents, and then finally to actual law. Then it comes to what your compliance is to ensure that you are actually satisfying what is required of you. So here I just highlight how strategy goes through risk management, etc. But then in the end dovetails into the compliance environment you have in your organization. You will see things like skills, resources, the tone directing behavior within the organization and ensuring that you are actually complying with requirements of the law within which you operate. And this is important to first look at it from a strategic level, but it's important to always think about how the strategy, the vision, etc., would cascade into processes and structures you put in place to ensure compliance with laws in the country. And this morning we are focusing on compliance with the Companies Act in particular. And on that point, it's a good time to then take a quick look at what are some of the new requirements under the Companies Act. What is new under the Companies Act 2019 Act 992? Have you complied with all these? Number one, I'll touch on introduction of company name services, and this has been around for some time. If your organization has not yet complied with updating your company suffix, then you are well behind time. But it's good you're on this call, and you should be approaching the office of the Registrar of Companies as soon as possible. So we have some examples. For instance, if you're a private company, the suffix should be limited company or LTD. If you're a public company, it should be public limited company or PLC. If you're a company limited by guarantee, it should be limited by guarantee or LBG. And what this does is to provide a clear legal entity form to anyone dealing with a company. So if I'm dealing with a company and the company is an LBG, I should have that understanding that this is an LBG and what the implications are. For instance, if the transaction should go south, who can I hold accountable within the organization? And this is very important, and it's an important initiative coming out of the Companies Act 992. We also have minimum capital abolished. In the past, we had 500 Ghana cedis for a private company and 1,000 Ghana cedis for a public company as minimum capital. This may sound small, but if you think through the fact that this could easily be a barrier to someone converting or moving from running his or her business as a sole proprietor to a full-fledged company that is incorporated and registered under the Companies Act. For the Companies Act, if you put this side by side, the fact that our Companies Act would allow an individual to incorporate a company, then definitely we will be encouraging movement away from informal sector into the formal sector if this particular introduction in Act 992 is promoted as it should in education, as we are doing this morning. There is also a change of company regulation to constitution. The big part is a name change. The constitution would largely do what company regulations used to do. Again, it's important that if as an organization you have not done the switch over to a constitution, then you have some compliance to do with the OLC, and I believe that the next session that Madam Kwaku would be taking will be highlighting some of these points for us to even understand better. Then I just want to also highlight on enhanced company secretarial qualifications. So for a company secretary, for a company, there are now minimum qualifications that need to be satisfied. A company secretary should have a tertiary education or equivalent professional qualification, and that means that the company secretary role has been elevated beyond a mere clerical role, and it's now a role that plays an important part in the governance of a company. And there are other qualifications. For instance, a member of the Institute of Chartered Accountants can be a company secretary. A lawyer in Ghana can also be a company secretary. And all this is just to show that within the Companies Act 2019 Act 992, there is renewed focus on governance. And what better way to do that than to also elevate the role of one of the key players in governance, being the company secretary. So again, you cannot just pick anyone from the street to be your company secretary. The position of a company secretary now comes with much thoughts around what is the qualification of this person. Is the person appropriately trained to be a company secretary or properly qualified to be a company secretary. So this is again an area we should be paying attention to. We also have the mandatory auditor rotation introduced in the Companies Act. We used not to have this for all companies in Ghana. This used to be for a specialized industry such as banking, but now for all companies, you would have to rotate away from your external auditor after 6 years, and this is to enhance independence, audit independence, and governance. So again, the count is on, and you would always have to pay attention to how many years your auditor has been in the role and what this means for the rotation, because it is mandatory and you should be making sure that you have that in place. Now, we also have provision on unclaimed dividend. Provision on unclaimed dividend. So maybe my host, if you can look at yes. So provision on unclaimed dividend. It's important that we understand for companies that have their shareholders not claiming dividend after 3 months. Those unclaimed dividend would have to go into interest-bearing account, and subsequent to that, after 12 months, you would have to transfer the dividend to the registrar. This is also new, and companies would have to pay attention to that. We also have major transactions. Major transactions is in to ensure that directors do not go into certain transactions defined as major transactions under the Companies Act. Essentially, transactions that would mean committing 75% or more of the asset value of a company will fall under major transactions, and this such transactions require the special resolution of shareholders. It's a cap on director rules, but it's also a check on the board to ensure that the board is going according to the broad aspirations of its shareholders, whilst there is that dichotomy between the shareholders and the board of directors. It is also a fact under agency principle that the board of directors are acting, while they are acting to pursue the objects of the company, they are agents also of the shareholders, and the shareholders have a say when there are major transactions happening within an organization. The last one on this slide I would want to point out is the restriction on voluntary contributions. We can have national need to contribute to funds. For instance, when we had COVID, the corporate bodies were called upon to contribute to the fund to support government activities around COVID. There is a restriction of contributions not exceeding 2% of the company's annual retained earnings. Again, this is an area that companies would usually not pay attention to. There is a big focus on what the tax implications are. Can we deduct contributions to charity, etc.? That would satisfy tax law. But the Companies Act also has this requirement to ensure that directors are not donating beyond this particular limit. And it's a way to maintain the capital and sustain a business. It's a capital maintenance principle to ensure that a company is run sustainably. I have a few more, and I would like to point out also from the Companies Act. So we have the report of directors that now require corporate social responsibility to be clearly identified in the report. There is also a requirement to provide details of steps taken to build the capacity of directors. Very important. So directors are not simply husband and wife always, but it's important that because of the important role directors play in organizations, they require continuous learning. They require capacity building to ensure that they are fit for purpose. They have the requisite governance acumen they have the requisite operational acumen to understand what is happening within the organization. And I'll link this to the second point I have on this slide, which is a requirement for directors to meet at least once every 6 months, meaning that directors ought to meet at least twice in a year. So the days where it was optional, directors will call, will we meet this year? Oh no, everything is fine. No, it is now a requirement that directors meet as a board at least every 6 months. To do what? To consider the financial and operational affairs of the company. So because of the fiduciary nature of the duty of directors, it's important that they understand what is going on. So you are not a sit-at-home director, but you understand that the financial and operational affairs of the company are in the direction that you expect them to be. And if you link this to the need to build capacity, then obviously, as a director, at the minimum, you need to understand the basic financial information that is generated out of the various financial reports of a company, and also understand the operational affairs of the company while bringing your unique technical abilities to the company. So directorship is in no way a free ride. It's not a role to just boast about, but it's a role that comes with a lot of responsibility. I would want to touch on one final introduction under Act 992, and then look at share some thoughts on best practice, addressing challenges, etc. Is the requirement to file beneficial ownership details with the Office of the Registrar of Companies. And this is quite significant because it puts Ghana in a space where corporate transparency is quite clear, and it enhances corporate governance because we need to know who is behind the company. Hitherto, hinged on the principle established in Solomon versus Solomon, the separate legal personality of companies. People have hidden behind companies to do several things, and this requirement of the Companies Act means that the Office of the Registrar of Companies would know who is behind the company, regardless of the level of entities that you place within. Who is the beneficial owner of the company? And again, this is a requirement for companies to file. I know a lot of companies have filed, but I know there are several companies that have also not met this requirement, and it's an important requirement to satisfy. And when we talk about having a strong legal compliance structure, you should be picking these requirements on the off and satisfying them in real time, because I have seen in practice where major transactions have not gone through because there were filings pending at the Office of the Registrar of Companies. So when Madam Registrar talks about the fact that the journey to legal compliance is one worth taking, I have seen it in practice because it's a journey that it's continuous, but you have to build a framework to ensure that you maintain that compliance going forward, and so that you can grab the opportunities that come with it. I know there are some challenges dealing with the ORC, some we've talked about in the past, and Madam Registrar has also highlighted some of the key initiatives coming out of the registry that will ensure that challenges around manual processing, beneficial ownership filings would be addressed, and these would really enhance how companies experience dealing with the Office of the Registrar of Companies. I'll just highlight some few things that we believe that companies should be paying attention to when it comes to dealing with the Office of the Registrar of Companies and to a large extent other regulatory bodies. One is to ensure that you are proactive. So I've talked a lot about delayed filings and what it could mean for your organization. So being proactive means gathering your documents on time and making sure that you are making the filing in good time to avoid the risks that late filings and or non-compliance would come with. Continuous learning, staying updated on regulatory changes. Uh, it's a landscape that remains fluid and it's important. For instance, as we are doing this morning, to keep abreast of these changes so that you are on top of what is happening in the space. The ORC has prestige services. I believe they will be focused on that. Let's utilize services that enhance efficiency. Be informed, comply with the laws and regulations, and we cannot hammer that enough, cannot highlight that enough. For SMEs, it's equally important that small, medium enterprises also maintain accurate records. Again, I've seen SMEs move from small scale production to large scale production coming out of, for instance, investments in those SMEs. But if you do not have your records accurate, then it's difficult to have investors coming into your business. And the ORC, the update on changes, which we've again seen this quite often done over social media and bulletins coming out of the Office of the Registrar General, and that is commendable. Madam Registrar talked about resource and capacity building, and that we believe would help in raising and building that culture of customer service that we are all pursuing. And then the continuous education that in programs such as this, the ORC is brought to your doorstep to understand what is happening within, what to look out for, and the vision going forward. I would conclude by leaving you with this nugget. So ensure your business operations are properly registered with the Office of the Registrar of Companies. Where there are changes in particulars, those changes should be filed with the Office of Registrar of Companies in time, and that's what we'll be getting into shortly. What are the changes that should be filed with the Office of the Registrar of Companies? Ensure that beneficial ownership details are also filed. Anything, it's very important. I'm sure Madam Kwako would highlight that as well. Annual returns should be filed on time. The right documentation, from my experience, companies sometimes do not pay the right attention to what is filed with the Office of the Registrar of Companies. So we see years down the line, we are scrambling to ask for correction of details that have been duly filed with the Office of the Registrar of Companies. And that is quite serious because the documents that go to the Office of the Registrar of Companies, they are fully signed off by a director, by a company secretary, and that is an important undertaking, that what you are filing with the Office of the Registrar of Companies, if you look at it from a presumption of propriety point of view, the information you are presenting to the authority is correct. So if you come 2 years down the line to say that, oh, that was not correct, then there is an issue. So it's important and a best practice to ensure that the right attention is given to what information goes into the forms that go to the Office of the Registrar of Companies. Beware of changes made at the Office of the Registrar of Companies. Again, webinars like this will allow you to do that. And then finally, I would say that have the right partner in managing your legal compliance. It's not always the case you can have every single activity done in-house. There are times that you need to procure services of experienced consultants to support this process in a systematic and comprehensive way to ensure that you are paying attention to the key issues that matter within your organization, but you are not leaving the legal compliance, which may appear mundane, but it's also an important pillar in addressing or satisfying your corporate governance structures. I thank you for your attention, and I believe that at this point, it's a good time to bring Madam Sarah Kwaku in, Sandra Kwaku, I should say, to take over and go into what specific compliance should you be having, satisfying with the Office of the Registrar of Companies. Madam Kwaku, thank you. She's Director, Inspection and Compliance at the Office of the Registrar of Companies. Thank you very much. You have the floor.
Thank you very much, Mr. Thank you. And thank you for touching on a lot of the compliance activities. I'm very happy because it gives me the opportunity to talk less. Okay, so let's share the slides. Yeah. Okay. All right. So we are going to look at some key. Good morning, everyone. Sorry, I haven't greeted. Good morning. We are going to look at some key compliance requirements under the Act 992. And by way of introduction, we're going to look at the establishment and then the mandate of the Office of the Registrar of Companies. We're also going to look at some importance of being compliant with the Act. And then our focus will be on specifics of some compliance requirements, like the annual returns filing, the beneficial ownership filing, and then the exemptions that we have under the regulations to the Companies Act. So the mandate of the Office of the Registrar of Companies, as established under Section 5351, is to register all types of business entities. So we are looking at entities under the Business Names Act, entities under the Private Partnerships Act, entities under the Companies Act, even Professional Bodies Act. And after registering these companies, we are supposed to also provide regulations to them, and then give education from time to time so that it will help them to be more compliant. Another aspect that the Office of the Registrar of Companies has been tasked to do is to maintain an electronic register of companies. So for companies that have been registered for December 2011 till date are on our current register. And so we have gone out there to let people understand that if they have been incorporated before 2012, they are supposed to update us or be migrated onto our current register, and that's what we normally call the re-registration. These are companies that are stuck on our old record or in the manual form, so they are supposed to come update us with their registration information. We also, as we said, regulations supposed to help companies so that they will know the things to do and they remain compliant under the Companies Act. And by way of complying, you then are able to have a good corporate governance under your company's registration and then on the registered office. So to help us do these, carry on our mandates, we have, as an office, streamlined processes and still in the process of streamlining so that companies will be easier for them to be able to be compliant. What are some of the things that we are doing currently? So, yes, we do have an electronic database, electronic register. However, we know that it's not top-notch. It's not as we want. So we are migrating to a new register, a more modern one that will make it so easy for companies to do the registration. It will make it so more friendlier to access our services as well. And then our forms, we know our forms are very bulky. it can be a daunting task to complete. We know that. And so with this new electronic database that we are going to have, it's going to be a way of online submission. So you don't complete the manual forms anymore. You submit everything online, process online, and even your output, which is a registration certificate and then the accompanying profiles, would all be accessed electronically. We would also be sending out notices or reminders so that companies would be aware that these are the things I need to know or I need to do. From time to time, these reminders will be sent, getting to the deadlines of penalties that will be issued out. If you have any changes you need to file and you haven't done that, all reminders will be sent to you so that it will be easier for you to be compliant. We are also carrying out monitoring and enforcement activities. We not only do we do that in-house, but on-site. We do go out to company premises, educate them, inspect their registration documents, advise them on the things they need to do. Investigations, we have written to some companies. So companies in the gaming and sports betting industries, for instance, and then the manufacturing industries, they have received investigation notices from us. And what we do is to check their books. There's some registers they are supposed to have. So we check all that, their minutes, books, their financials, and then we do give them the advice they need so that to come and regularize their information with the office. In that way, we then have an accurate database that we won't have a different set of information with us, and they also have a different set of information on their registers. So these are some of the things we do to help companies become more compliant. We also engage in stakeholder activities. So we have programs with the banks, for instance, law enforcement agencies, for instance. We have associations where we would meet their members, tell them the things they are supposed to do, and then it makes it easier for them to also comply with the dictates of the Act. So now I'm going to go to some specifics of the key requirements. We are going to touch on the annual returns. So under section 126 of the Act, it mandates every company to file its annual returns within 18 months of incorporation. And then subsequently, once every year, you are supposed to update the office with your current directors, current secretaries, current members. If your office location has changed, you are supposed to update us with it. Even your contact details, if all these things have changed, your objects, nature of business has changed, you are supposed to update the office with these informations. Failure to file your returns has implications. And these implications comes in the way of penalties. So for instance, under section 1267 of the Companies Act, it states the penalty that you are supposed to incur. It says that you are supposed to incur, the company and every officer of the company is supposed to be penalized for 25 penalty units each day in default, that the default continues. And so this is what the Act says. However, we realize that it's not easy for companies today. Things are not very easy for them. It's difficult. And so with the registrar's powers, say administrative powers, currently all we are doing in terms of the penalties is to pay a fee of 1,000 cedis for companies that are defaulted for the first to the fourth year. So they pay 1,000 cedis for that. And then from the fifth to year and above, they pay a penalty of 2,000 cedis. So aside paying this penalty, you are supposed to actually do the filing make sure you file up to date. Because if you do not file up to date, the penalty is a yearly one that the registrar has applied. So every year, it means that if you default, you're going to pay that 1,000 cedis until the fee changes. And it's going to be a cumulative one. So we advise that you take steps to make sure that you comply with its requirements under the Act. Another sanction is that the registrar can strike off your name off the register. She's allowed to do that under section 289 to 290 of the Companies Act. Another key requirement is the beneficial ownership filing. So section 13 of the Companies Act requires every company, whether private, public, external, to provide us with their beneficial ownership information. And we are looking at individuals. The Act says natural person behind the company. So if the company's legal owners are even corporate entities, we are expecting that as a company, you should be able to drill down till you get to the individual and then furnish us with the individual information as your beneficial ownership. And the threshold for the legal owner in terms of shares is 20% or more. So if you have 20% or more or as your shares, you are expected to disclose to us your beneficial ownership status. And if this beneficial owner is also a politically exposed person, you are supposed to disclose. You are looking at beneficial ownership in terms of control as well. And so all these criteria can help you to identify who your beneficial owner is. And we've had instances where people have said that I am a nominee to the beneficial owner. So I can't put my name there as a nominee or as the beneficial owner. The Act does not allow nominees to be beneficial owners. It says that the ultimate owner of the company. So we are looking at that ultimate person, not the nominee to the ultimate owner. And every company is supposed to maintain a beneficial ownership register. And if the register changes, the names changes, the owners change, you are supposed to update us. The company is supposed to update us within 28 days. Failure to do this has implications. It has penalties attached to it. And the registrar is supposed to come up with the appropriate penalty fee that has to be paid. And we are looking at the purpose of this beneficial owner. Wisdom has touched on some. So, it brings transparency. It helps prevent the misuse of companies. Anti-money laundering activities are also kept. If I know that I'm doing a business or I'm going to enter into a company, a transaction with a company that is credible, that I know that the owner behind the company is somebody I can trust, is somebody who has good reputation, somebody who has credibility, I will be willing to enter into such transaction with the company. And so for all intents and purposes, disclosing who your beneficial owner is to your advantage and the investors who would also be doing business with you. We are going to look at other compliance obligations, looking at when changes in terms of changes in directorship, changes in secretaryship, registered office, shareholding has changed. All these things have changed. You are supposed to update the Registrar of Companies with the current directors, secretaries, and the registered office of the company. And this is supposed to be done within 28 days of the change hasn't taken place. Again, failure to update us comes with penalties. And in the new system that we are deploying, we are working on deploying, all these things, the penalties will be fixed in there. And so if you don't disclose, you don't do the changes ahead of time or within the stipulated time, the system would automatically start calculating the penalties for you. So it's important that we take these obligations very seriously so that we don't incur unnecessary costs. Every company is also supposed to maintain certain registers, and we are looking at register of members, register of charges or debentures, the beneficial ownership register, and then even directors' interest register. All these are outlined in the Companies Act, and so it's our duty to ensure that we know these requirements and then meet up with them. Otherwise, they have their repercussions. Directors' duties, for instance, are all spelled out. We don't touch on that. Spelled out in the Companies Act. So every director is supposed to know what they are supposed to do. Secretaries have minimum qualifications that they must meet before they can play the role of secretary. And it's important that companies look at these requirements for secretaryship, very important. Because if you have a properly qualified secretary manning your business for you, it will be so easy for you to be compliant because that secretary has that knowledge, that has the skill, the technique, and is able to help your company to be compliant. So we advise that these requirements are complied with, because we also do our verifications when you do the submission, and so we'll ensure that these little things are complied with so that it will not get to the point where you have to be paying penalties for some of these things. And also another aspect in the Act is under Section 21, where we have the various suffixes of the companies that we register, both private, public, limited by guarantee, and all that. And finally, you're supposed to update us with a current constitution, what we call the registered constitution. We've had instances where people have furnished us with a constitution, and the name that is on the constitution is a name that was required under Act 179. So, for instance, we had John Bosco Limited, and they have furnished us with a registered constitution, and the name on the registered constitution is John Bosco Limited. Obviously, it tells you that there are compliance gaps there, because for a constitution, you shouldn't have the word limited. You should either have it LTD or limited company. And so we would advise, we do the name change, name suffix change, and then we'll go through an approval process, and then you can properly have your constitution filed. Now we're going to look at the some exemptions that the regulations to the Companies Act has provided for small scale businesses. So under Section 51 to 53 of that Act, it classifies companies into three groups. So we have the small scale companies, the medium scale companies, and then the large scale companies. But this exemption is for the small scale companies. And so the exemption is such that companies, small scale companies, will not go through the rigorous process of having a full audit prepared for the company. So after the audit, normally they would publish the audit. Small companies are exempted from that. What they are encouraged to do to help them make them more compliant is to have the auditor review their financials for them. When the auditor reviews, the auditor then gives us a brief report of the financials. So you add it to the annual returns form that you complete, and then you file with us. So the exemptions there that we are looking at to classify you as a small scale company, we are looking at your revenue or your turnover and then your assets. That should be less or equal to 400,000 Ghana cedis. And this was done because we want to reduce some of the burden that small companies go through before they file their returns. It makes it quite a daunting task for them. We're also looking at it's not cheap for audit financial statements to be prepared, and for a company that is owned by a husband and wife or siblings. As a small company, they are not big companies that are going for huge contracts and all that. We want to make it so easy for them so that they will be able to report on their annual returns. What are some other supports that we give to companies so that it will make it easier for them to be compliant? We look at stakeholder consultations. I mean, we meet with lawyers, secretaries, other businesses, associations, and all that. We do that education bit so that they help us in terms of making their members know the things they need to do and then also be compliant. And some of these workshops we conduct with stakeholders, for instance, the banks. We have made them aware that for them to do business with companies or businesses, they are supposed to ensure that they are in good standing. And so if they come to come for a facility or even update their accounts and they are not in good standing, you shouldn't do business with them. And so they will ask you, come to the ORC, regularize your status with them, and then come back for us. And these has helped companies to be more compliant. So we have also come up with, we are coming up with a call center, a help desk, where there will be officers at posts receiving all your calls, any inquiries you want to make, basic information that you would ordinarily have taken vehicle, come to the office just to find out. You don't need to do that anymore. You sit in the comfort of your home, just make the phone call. You will be redirected to the right person to give you the answers that you need. And so these are all things that we are doing just to help people to be compliant, make it very friendly for them to be able to access our services. So in conclusion, we are saying that compliance is everything. It is key for a sustainable company. It helps your company grow. It helps in transparency. I mean, who wouldn't want to do business with a transparent company? Know that this is what the company is giving me. This is what I see. So we are asking that you help your own company or your clients to be more compliant under the dictates of the Companies Act. So partner with us, please, so that we will be able to achieve the compliance rates that every company, every registry is supposed to have. Thank you very much. And I will hand over to Eric for Eric Yeboah. He's with the Insolvency and Liquidation Directorate of the Office of the Registrar of Companies. He will take you through the liquidation process. Thank you.
Thank you so much, Sandra, for your insights on compliance. I would want to mention that one area of compliance that we mostly have issues with is where it comes to the end of life of the company. Where we no longer have interest in the company. Sandra, could you please end your share so that I can share mine as well? Yes, so when it comes to the end of life of the company, mostly we abandon the company. But unfortunately, unlike humans, companies do not die automatically. It requires that we go through legal requirements or legal processes in order to dissolve the company and have the name properly struck off the Register of Companies. And that is where the insolvency and liquidations division come in. So in this discussion, I will speak a little on the insolvency and liquidation services division, our mandates, and also some of the processes or some of the available ways by which you can dissolve your company or have the name struck off the register. Okay. So the insolvency division of the ORC is specifically mandated to regulate insolvency practices in Ghana. We oversee administration, restructuring, and insolvency procedures of companies and other body corporates in the country. We also receive reports from liquidators and insolvency practitioners, and we also provide education to the public when it comes to liquidation and insolvency matters. Why is it important to anybody or everybody when it comes to insolvency issues? So for the businesses, insolvency provides an orderly exit or recovery. For the creditors and investors, insolvency provides a fair and transparent debt recovery system. And also for employees, where it is possible, employees get to preserve their jobs. And also for the economy in general, it brings trust and it attracts investments, because insolvency is providing a system where investors are sure that where they invest in companies, even when the company goes down, there is a proper legal process, a proper legal system to ensure that they recoup their money. It gives them some comfort to invest in our economy. So what do we do at the insolvency division? We oversee business restructuring administration. We undertake official liquidation, private liquidation, dissolution without full winding up. We also regulate insolvency practitioners and register them as well, and also provide education. So some of these mentioned here are some of the processes that are available to a company where the company wants to end its life, so to speak. So we'll look at a few of them and then we'll see the things that are required to do where it requires that we struck off the name of the company from the register. So the first one we talk about is a dissolution without full winding up. So this comes in where a company has ceased operation, where the company is dormant and the company has no liabilities. Most often, we register companies with a view to do a particular business. It is not always that it is actualized. So sometimes we have the names of the company sitting on our shelves and in our wardrobes. But the thing is that once we leave them there, the company continues to rack up penalties, because as the earlier speakers have mentioned, there are requirements. As long as the name of the company continues to exist on the register, you're supposed to file annual returns. So all these things rack up penalties. It affects your reputation. And you have this legal requirement that you go through some of these processes. So if we have registered the company never commenced business, or the company has been dormant for so many years, there are no liabilities, then one sure avenue to go through is to do a dissolution without full winding up. With that process, all you need to do is to write to the registrar that the company is dormant, the company does not intend to do any business. The law provides that once the registrar receives any information to that regard, the registrar may write to the company to confirm its status, whether or not it's continuing to operate. If we are informed that the company is not in operation, then that information is published in the company's bulletin. We do that. The law provides that we wait for 3 months. So we put in the bulletin that if anybody has any reason why the name of the company should not be struck off, they should come up. So if after 3 months we don't receive any information to that effect, then the registrar will strike off the name of the company and publish same in the company's bulletin. We see a lot of people use this process because it is not time consuming, it is not very expensive. So rather than just leave the name of the company or leave the document in your wardrobe, this is a very sure way to have the name struck off and take off any filing obligation off your shoulders. Another option is the private liquidation route. So say the company has been in operation. For some reason, the shareholders of the company have decided that they do not want to continue with the company. You can go by the route of a private liquidation. So this is where the assets of the company are going to be sold to pay off the debts of the company. A company can go by private liquidation only where it can pay off the debts of the company within a year. So what must be done is that the directors will make an affidavit of solvency. So they go through the books and they put together these affidavits to say that they've inquired into the affairs of the company and that they are of the opinion that the company can pay off its debts within a year. Once that is done, they pass that to the members or the shareholders of the company, who would also pass a special resolution in that regard, that the name of the company be liquidated by way of a private or a voluntary liquidation. So here you appoint your own liquidator who takes up the company and goes through the entire liquidation process. Now, once this SR is passed, you are mandated to furnish the Registrar of Companies with such information. So once that is received, we publish it in the company's bulletin, and the liquidator is able to start his work. Once the liquidator continues or completes the whole liquidation process, they are supposed to file a report with the Registrar of Companies. And once we are convinced that the whole process has been well done, then the registrar will strike off the name of the company and then publish it in the company's bulletin. By so doing, all directors are relieved of any filing requirements. Another option that is available is the official liquidation process. Now, official liquidation comes in where the company is insolvent. The company is insolvent means that the company owes more than what it has, that the company will not be able to pay off its liabilities as they fall due. Now, there are several modes by which official liquidation can be commenced by the company. It could be through a special resolution, which is passed by the shareholders of the company. It can also be a petition to the registrar that the name of the company be struck off. It can also be a petition to the court, where it goes to the court or it goes to the registrar. The court may give an order where it has gone through the books or whatever it needs to do, and it has established that indeed the company is insolvent and that's the name of the company be struck off the register, or the company should go through liquidation process. The order for the company to go through the official liquidation process. Also, where a petition is sent to the registrar may require that the parties go to court for an order, or the registrar can, after going through the books, doing inquiry into the affairs of the company, may also give the order that the company be liquidated by way of an official liquidation. There is also the instance where a company has commenced private liquidation, but at a point, they realize that indeed, unlike was initially thought, that the company could pay off all its debts, it shows that indeed the company cannot pay off its debts. Then the liquidator can lead the charge and have the company or the liquidation process converted from a private liquidation to an official liquidation. Also, there is administration, which we will talk about a little later, where a company is in administration and they've also realized that no, at this point, the company should rather be going through official liquidation. Then they can convert also to official liquidation. I must also mention that from 2020, there has been the Corporate Insolvency and Restructuring Act, which now regulates all insolvent matters. Before that, the Registrar General or the Registrar of Companies was the sole official liquidator. That meant that where a company had to go through official liquidation, it is only the Registrar of Companies that could do that. But then with the coming into force of the Corporate Insolvency and Restructuring Act, the CIRA, it has also been provision where specially trained professionals called insolvency practitioners can also undertake official liquidation processes. But all of this is supervised by the ORC to ensure that the liquidation process goes on smoothly required by law. So basically, these are the modes that are available to a company where it comes to the end of life of the company. We also talk about winding up of external companies. We know that external companies are those companies that are registered outside the country, but they may have an established place of business in Ghana. So when it comes to the end of life of such companies, how do we also kill them off, so to speak, in the right way? So there are two processes that we go through. Now, where it happens that the parent company is being liquidated or dissolved in the parent country, that is where the company was originally incorporated, then we use a Form 24. We use a Form 24. Once the parent company does not exist, it also means that the branch or the liaison office in this country can also not exist. So we go through the right process by filing a Form 24 to have the name of the external company struck off the register. There is also the instance where the company still exists in its parent country, but it has decided to cease having an established place of business in Ghana. In that regard, we use a Form 25 to properly go through the cessation process. So once you file appropriate form with the ORC, what we do is that we publish the name in the company's bulletin to let everybody know that the company has ceased to have an established place of business in Ghana, and then we continue to strike off the name of the company from the Register of Companies. So let's look at administration and restructuring. As I mentioned earlier, the CIRA, that is the Corporate Insolvency and Restructuring Act, has introduced administration and restructuring. It is not always that a company is liquidated because they want to be liquidated, but sometimes there are financial challenges. Sometimes there are management challenges, such that the company is owing so much, so it is insolvent. But then the company is viable. So unlike the previous regime where all that was available was once the company is insolvent, let's kill the company off, let's pay what we can pay and go. The CIRA now is designed to rescue distressed but viable companies. So the approach now is let us look at on track. One of the processes available is through administration. So administration of the business, the property and the affairs of the distressed company in a manner that provides an opportunity for the company to, as much as possible, continue to exist as a going concern. What administration also provides is that it provides a temporary freeze on the rights of creditors and other claimants against the distressed company. So once a company goes into administration, within the period of administration, creditors and claimants are stayed. So they are able to make demands on the company just to allow the company that freedom, that period, so that it can put its acts back on track. So the temporary management of the affairs, business and property of the distressed company by an IP. So I mentioned that they are trained professionals known as insolvency practitioners. So an insolvency practitioner can be appointed over a company in distress, and they put in a rescue plan, And the IP is going to ensure, it's going to be the realms of affairs of the company to ensure that the plan that they've put in to resurrect, so to speak, the company goes on smoothly and helps the company to bounce back. Also, the development and implementation of a restructuring plan which rescues the company and ensures that the company is put in a better situation than it already was. It will also ensure better returns for creditors and shareholders as well. So what we also do is to register and then license the IPs. So as we have said, there is a lot on the shoulders of IPs. How do we ensure that IPs are working in the interest of the company? The CIRA has also made provision that every IP must be licensed and regulated by the Registrar of Companies. So we maintain a record of this and it's up to date. We also review the conduct of every IP to ensure that they are maintaining the right standards. They are doing what is expected of them. They are supposed to file every 6 months a report with the insolvency division of whatever work they are doing. The registrar may also suspend or remove an IP where it becomes necessary. So these are some of the introductions that have been brought to rescue businesses that are in distress and are viable. So we want to say that now it is very important that we do not leave the companies that we do not intend to run on shelves. Rather than leave them there, once we do that, they are just going to rack up penalties. They are going to affect our reputation. Imagine the name of your company being published in the dailies that you are not compliant. It affects your reputation out there. It is also a legal requirement that once you do not intend to continue use of a company, you go through the legal processes to have the name properly struck off. Once we do these things, we will remain compliant. It will help us. It will help the entire country maintain a very good name out there. We will attract investors and everybody will be very happy. So thank you so much. Yes.
Thank you very much, Eric. Thank you very much to all our presenters today. It's been a very insightful and educational session. I have learned a lot, and our chat box has been very busy. We are very happy. Our participants have enjoyed the session and have been engaging. At this point, we will take a Q&A session. We had some participants send their questions ahead of the webinar today. So we'll quickly go through our chat. Okay. Okay. So we'll quickly go through our chats. There were a number of questions on the online portal. I believe Madam Sandra can address that. We had a number asking when the ORC is setting up an online filing of annual returns. This was a running theme through most of the questions that we received. Madam Sandra, if you could address this question, are there any timelines concerning the online filing?
Yeah, thank you. So, currently the system that we are operating does not allow the Okay, can I go ahead now?
Yes, please. Please go ahead.
So currently the system we are operating does not allow the online filing of annual returns. You physically have to come to the office to do that. However, as I mentioned earlier, we are rolling out a new system where it will allow for the online filing. We are going to even use what we call the SBRL system, so that it will make it so easy for companies to do their filing. Unfortunately, we've had some issues with the development of the system, technical issues. We are still working on them. In fact, as we speak now, there is a team that is doing testing of the system that is being developed. And so we don't want to tell you it will come up end of year or beginning of next year, but we can assure you that within the very shortest possible time, it would come out, and then it will make it easier for companies and businesses to renew or file their returns.
Okay, thank you very much. So we are looking forward to having this system come on board to make business operations much easier for everybody. There's another question directed to you specifically.
In fact, we as an office are anxiously looking for this system.
I understand.
Yeah, because the crowd in the office we are not happy with. We also want it to be easier. And once it's digitized, compliance becomes easier. And so we are doing all we can so that ease of doing business will be there.
Okay, there's another question on the penalty for late filing. We have an attendee asking, in relation to the penalty for late filings, are the fees of 1,000 Ghana cedis and 2,000 Ghana cedis payable for each year of default or as a fixed payment?
So it's a fixed payment for the year. So if you default a year, you pay the 1,000. That is the penalty, but it doesn't exempt you from filing the actual annual return. Default this year, you pay 1,000. If for some reason you default again next year for filing the previous year's amount, you would pay a amount at the time of filing. So this is a yearly penalty payment, time for all. But for companies that are already in existence for this year, the dispensation that the registrar was to the if you owe already the system, you pay 1,000 cedis for the 4 years and then be able to file the 4 years annual return. If it's 12 years, then you file for those number of years. But moving forward, subsequently, it is yearly. So we are not going to give you that waiver anymore. It's just to encourage you to clear all the areas that you have so that we'll have a clean sheet for the subsequent years.
Okay. So when you say moving forward, so is it from next year we should expect that if you default, you pay the penalty for each year of default?
Yes, each year of default.
Okay. Okay. Thank you. We also like, sorry, another one on digital. So there's a question on what is the process for suspending operations of a company temporarily or winding up of a company, if there is such a process at all. Sandra, will
this
you
will be a question for Eric.
Eric, yeah. I'm coming. Yes, Eric.
So I think that we don't have a process for temporarily suspending the company. Once you have registered a company, you are supposed to file annual returns. So if you don't intend to run the company, then you can go under section 289, that is the dissolution without full winding up, where the name of the company will be struck off. But once the name is struck off, the law provides that within 12 years, the court can order that the name be put back in the register. So that is the only available process.
Okay. Okay, so there's another question on the status. What is the status of registering beneficial owners for pension schemes at ORC? Madam Sandra, could I assist us with that?
Yeah. So, the Office of the Registrar of Companies don't register pension schemes. So, it's all those companies that are incorporated by the office under the Companies Act. Those are the ones that would have to provide us with their beneficial owners. So, for pensions, I think it's securities, which institution handles pensions, they are supposed to collect. Yes. They are supposed, yes, please. So they are supposed to collect the beneficial owners for the pension schemes because they regulate them, so they would handle that.
Okay, thank you for that. Just quickly going through. Okay, so for a non-profit, for a not-for-profit organization, which is owned by another corporate entity, right? And it's governed by a board and an executive director who controls the resources of the organization and who qualifies. Let me take that question again. For a non-profit organization, which is owned by another corporate entity and governed by a board and an executive director who controls the resources of that organization, who would you say qualifies to be the beneficial owner of that entity? Do you get the question? So this relates to BO filing. Hello, Sandra.
Yeah, your line was breaking at my end here, so I didn't really get the question.
Okay, so the attendee wants to know for beneficial ownership filing purposes, an entity which is not for profit and it's owned by another corporate entity, okay, and it's governed by a board and an executive director, and that director controls the resources of the organization, who would qualify to be the beneficial owner of that entity for filing purposes?
Okay. So the question mentioned that director controls. So we are looking at beneficial ownership in terms of control. So if that director is the one that controls the company ultimately, then you disclose that director as the beneficial owner. And this is something that the company is a company that must determine who really controls the company. It is not the duty of the registrar to tell you who your beneficial owner is. We can help you know the criteria to determine who your beneficial owner is, but the mandate is on the companies to be able to identify who their beneficial owner and then furnish the office with it.
Thank you. There's one more question. Where a company adopts a constitution and goes ahead to register it, in case there is a change in directorship and or stated capital, should the constitution be changed to reflect those changes? And is a registered constitution once and for a lifetime?
So I'll answer the second question first. A registered constitution is not once for a lifetime. You can change your registered constitution anytime you want. And with the first question about directorship being changed and then capital being changed, for a constitution, we don't have stated capital provision in the constitution. It is not there.
Mm-hmm.
However, for the directorship, you are supposed to have the first directors of the company provided in the registered constitution, and then finish us also with the current directors of the company per the changes that may have gone on. So your registered constitution under clause 7 should have that two categories of directorship. That is the first directors, and then the current directors. In that way, when we look at the constitution, we know that there has been changes to the directorship of the company, and then we come and find it.
Okay. Thank you very much. There's one more question, then I will quickly go to Eric. Eric, so with regards to dissolution without full winding up, if the company responds saying it intends to continue business, how will the ORC handle that?
So if a company intends to continue, then they must comply with the requirements of the company. So with the filing of the annual returns and all of that, we expect that that will be done. That is what will even, in fact, tell us that you intend to continue running the company.
Okay. Thank you for that. And also another question for you, Eric. Please don't go off. I understand there is currently a hold on the licensing of IP. As there are too many IPs. Please, do you have any comments regarding this?
Okay, so when it comes to the registration of IPs, the law has also provided that as a body that has been legally registered to train IPs. They've had their law currently passed, and they are now putting things in place to ensure that IPs are well trained even before they are recommended for licensing by the ORC. So I think that is why they have put, let's say, a freeze on registering IPs now. But I know that their processes are far advanced, and very soon they will touch on that.
Okay. So we look forward to updates on that very soon. Thank you, Eric. And there's one more question I wanted us to look at quickly. Quite a number are coming through. Trying to sift through as quickly as we can. Okay. Question. Okay, there's one question for you, Sandra. Kindly provide the estimated timelines for such reports on companies. There are rumors that one needs authorization from a company to conduct a search on that company. Could you kindly confirm if this is so?
Okay. So under the Companies Act, anybody at all can request for information on a company. And this information will be provided, supposed to be provided by the registrar to whoever requests for it. However, we've noticed that aside requesting for information on companies, people actually come in to request for profiles of companies, company profiles, documents. They request for Form 3 of the company. They request for the constitution of the company, even to the extent of requesting for a copy of the certificates of the company. And because of data protection laws now, which we have signed on to, and we are mandated to actually sign on to data protection because we keep people's personal data, we are not allowed to just give out some of this information or these documents. Let me put it that way. And so if you request for details, we will give it to you. But to give you the actual documents of a company that you are not associated with in any way is what we cannot do, and we've stopped doing. And so if you want documentations of a company, it must be either an officer of the company requesting for it. And this officer must write and then request for it, we will check whether that person who signed for the document, for the letter, is part of the officers of the company, then would issue it out.
Okay, thank you for clarifying that, Madam Sandra. And there's one more. What is the capital requirement for sole proprietor who wants to formalize his business by registering as a company? So that the person currently has a sole proprietorship and wants to convert to a company.
Okay. So, as Wisdom mentioned in its presentation, that is one change in the New Companies Act. There is no minimum capital requirement. You decide how much capital you want to start with a company. Even if it's 10 cedis, it's what you state as your capital. 100 cedis as your capital. You pay the capital duty on it, which is 1% of whatever capital that you state.
Interesting.
You can start a company with any capital now. There are no restrictions except some of the regulated industries. For instance, a bank where they have their minimum requirements. Foreigners involved in business where they have their minimum requirements. Those ones we are supposed to ensure that you meet up those minimum requirements.
Okay, thank you. Also, on the exemption for small businesses, when is it expected to commence for the annual reporting? The exemption for small businesses.
In fact, we started already.
Okay.
Beginning this year, we have given those exemptions. We are not taking the full report. If you don't have it, we don't insist on the full report. If you give us a review by the auditor, statement of affairs, we do accept it. It's just that you cannot file an annual return at all without anything from the auditor. And that is what we can't do because the law doesn't allow us to do that. You need to bring something from the auditors.
Okay. So at least the party should present evidence from the auditor. That will be the basis for granting the exemption. Okay. Thank you, Madam Sandra. Quite a number still coming through. Let's see if you can quickly look at a few. Okay. In an instance where the shares of a company is held by a trust company for the benefit of various beneficiaries, who can be the beneficial owner? The directors or the beneficiary?
So again, I would direct this question to the company. The company should tell us who is controlling the company. Who has the right to appoint majority of the directors? Who has the right to say that I own this number of shares? Who has the right to a voting majority of the voting rights? So it's the company to really tell us the face behind the company. It will be a bit difficult for us sitting from afar to determine what goes on in the affairs of the company. So the company should look at all these criteria: voting rights, directorship appointment majority, shareholding, or even charges. If they have assets and all those ones, you can consider all those things as somebody who owns it and therefore has influence on the company. Somebody who can even tell you the direction that the company should go. If maybe you are operating in this industry, says no, let's stop it. Let's do this rather. All those people are influencers, significant influencers of the company, and need such people to be recorded as beneficial owners.
Okay, so it's a self-reporting requirement, as you've indicated. Thank you. So still based on that, there's another question asking if the Office of the Registrar of Companies independently verifies BO through any means. So once the company files the BO details, does the ORC do any independent verification?
Yes, we do. we are supposed to, in fact, that's the stage where we are getting to now, verification of beneficial owners. And occasionally, IFC and the rest come for information, and then we liaise together in doing this verification. So that's the level we are. Outside collecting the data, we are getting to the level where we'll be verifying some of these data that we have in our register.
Okay. Okay, our time is fast spent, but let me just take one last question. I think this one is very important. So, an attendee is asking if the audited financial statements are not ready, can the unaudited financials be submitted so that they comply with the filing requirements? Is it something the ORC will consider?
My simple answer is yes. So for that small scale company that is not mandated to go through the full report, audit report, publishing and all that, we would accept an unaudited one. At least you are informing us that these are the balance sheet and all that of the company. So it's something that we can work with.
Okay, but so just to clarify, you mentioned it's this exception may be made for small companies, but if it's a big company, that is required to go through the whole process of filing sign audited financial statement, this exception will not be available, right? Okay.
Yes.
Thank you very much. Thank you. We have so many questions. I think Madam Sandra and Eric would attempt to respond to all your answers at the background. Our time is gone, and would like to bring our session to an end. So from my side, I would crave the indulgence of attendees to kindly assist with my screen showing. Not showing. Okay. Okay, we would like to have your feedback on the session, and this will help us to curate our future webinars or sessions for you. So we would crave indulgence to take a few minutes, about 2 minutes, to scan the QR code, and then you can give us your feedback in just the next minute. So thank you very much for joining us today. Our partner Wisdom Panel will take over and give us the closing comments. And whilst we listen to him, kindly give us your feedback. Thank you.
Right. Now, thank you very much. And thank you to our panelists. First, our thanks goes to the Madam Registrar, Mrs. Pepper. Thank you for gracing this webinar. You laid a solid foundation for us to build on discussing compliance with the Companies Act. Madam Sandra Kwaku and Mr. Eric Yeboah, your presentations were insightful, and we are grateful that you joined us to share with the teaming public businesses and investor community. I believe this session has enhanced understanding of what needs to be done when it comes to compliance with the Companies Act. It's been a great session this morning. As I mentioned in my presentation, legal compliance is not just an admin thing to do. It is a pillar that forms part of ensuring that a company's corporate governance is where it has to be. And there's a direct link between legal compliance structure and the strategy and vision of the company, and of course, the corporate governance structure of a company. And I believe that we'll be leaving this call with that understanding, a renewed focus on identifying what needs to be in place to get your legal compliance structure well. I also mentioned that it's important you keep up to date with changes in the law. You file the right information with the Office of the Registrar of Companies. You understand what is happening at the Office of the Registrar of Companies and ensure your company is aligned. And finally, you have the right persons in the room. You have the right resources to ensure that you are complying with the legal requirements. You have experienced consultants in the space that help you to bring technology as well as the understanding of the landscape to ensure that you are complying with all the requirements of the companies and of course all regulatory requirements that as a company you have. We would say good afternoon to you. Enjoy the rest of your day and looking forward to interacting with you. If you do have a question, we will send snippets of the material across to you over email. If you have a question, feel free to reach out to us and we'll be happy to address any question you have. Thank you to the ORC team. Long live Ghana. Bye-bye.
The Institute of Chartered Accountants Ghana as president from 1982 to 1984. In 1991, Cecilia Nyan was appointed as a partner and became the first female partner in the Big Four accounting firms in Ghana. She later became the president of the Institute of Chartered Accountants of Ghana.
Hello, my name is Eric Ewa with the Insolvency Division of the Office of the Registrar of Companies. I welcome you on behalf of the Registrar of Companies to our maiden edition of the ORC's Educative Podcast. With me is Mr. Jones Nathaniel Ansa, the head of the Insolvency Division, and today we are going to enlighten you on insolvency and liquidation. Welcome, Mr. Ansa.
Thank you, Mr. Eric.
Great. Because I know that with the ORC you deal in registration of companies and the likes. But with the Insolvency Division of the ORC, what do you really do?
The Syria Corporate Insolvency and Restructuring Act, Section 153, establishes the Insolvency Division, that of the ORC department. And the main function of that ORC, the Insolvency Division, is to register insolvency practitioners and see to it that all liquidations pertaining to 992, that's the Companies Act, and that of the Corporate Insolvency and Restructuring Act, should be superseded by the Office of the Liquidation Service Division. So the ISD, which is the Insolvency Division, that of the ORC, takes through liquidation processes, being a private liquidation, official winding up, closing down of a business name, and all that. So we actually take on, and then we also educate the public when it comes to liquidation matters. The Registrar of Companies also advises the Attorney General on liquidation matters. So it's a division that takes care of liquidation, and our liquidation should be done with the processes.
Really, you've mentioned liquidation a couple of times. What really is liquidation?
Okay, liquidation can be simply defined as converting company assets to pay off debts of that company.
So in which instance will it be necessary to convert company's assets to pay debts?
That is where a company moves into official winding up, official liquidation, where a company is owing that it cannot pay its debts as and when it falls due. So when you are appointed as official liquidator, your duty as official liquidator is to sell the assets of the company, pay off creditors, and close it down.
So that means that there are types of these liquidations.
There are.
What are they?
So we have the voluntary and the involuntary. So when you talk about the voluntary, that is where the shareholders themselves decide that they want to wind down the company. And that maybe the purpose of which the company was registered has been fulfilled. They want to wind up the company and leave the country. They can go under 274, which is the private liquidation. And then we have what we call the involuntary one, which is the official winding up. That is where a company is owing that it cannot pay its debts as and when they fall due. We have nothing to do. than to wind it up.
So that means that with the private liquidation, I'm doing it myself. I can pay off my debts.
Yes, within 12 months.
Okay.
Within 12 months. We're going to go deep into it. That's why I want to come up. But we're going to go deep into what actually it entails when we talk about private liquidation, when we talk about official liquidation. So when we talk about the branches, about the two, we're talking about the voluntary and the involuntary. So with the voluntary one, there's another aspect of it, which is the dissolution without full one in now. That is where the company has ceased to operate. Or when the company was registered, the objective of the company, the Registrar of Company on which the company was registered, they are no more interested. They've not done business again. You can't leave it there. For us to have a credible and accurate data, you have to write to us that the company has ceased to operate for us to dissolve it and take it out of our register. So under the voluntary, we have the private liquidation, and then we have the dissolution under Section 289 of the Companies Act.
So say I want to come under the 289 you just mentioned. Say I registered the business. I never.
This is Deloitte Ghana. By building on Deloitte's core purpose of making an impact that matters, we are a leader in professional services in Ghana. Across many Ghanaian professional services firms, our identity can be traced as far back as 1947. For the first time, here is our story. Meet some of the people who started it all. In 1939, James Donald Barnes, a Scottish chartered accountant, arrived in Goku as an internal auditor of United Africa Company. This was an era where there were very few qualified accountants in the country, with most of the